Ladies and gentlemen, I welcome you all to the H1FY24 post-earnings conference call of Spectrum Talent Management Limited. Today on the call from the management, we have with us Mr. Vidur Gupta, Managing Director, and Mr. Siddharth Agarwal, Full-Time Director. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risks and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to detail us about the performance highlights for the quarter that went by, the growth plans and vision for the coming year, post which we will open the floor for Q&A. Over to the management team.
Thank you, Vinay. Good morning, everyone. Thank you for joining the call. I would first like to highlight how the H1 has gone. For our core business, our top line has grown by about 19.5% compared to H1 of the previous year. Overall, we did a top line of 431 crores. Total deployed manpower increased to 23,447. We added a lot of internal staff. We've added over 50 people. This is usual. Most of them are lateral hires or mid or senior level hires. And also we added 73 new logos in H1 of this year. We grew our internal sales team from 11 people to 23. We opened 2 new offices. One is Chennai, and second is Ludhiana, which is a delivery center per se, where we've added a fair amount of space to add about 100 people. The H1 has not been good when it comes to profitability, which was affected by 2 factors. One was there was a slowdown in the high margin recruitment business and the IT staffing business. As an organization, we have a fair amount of contribution that comes in from our recruitment and the high margin staffing businesses. Both of these had suffered a major slowdown. It's there all over in the news as well. It is primarily due to the recessionary phase and increase in interest rates in the US and the geopolitical situation in Europe, owing to which the hiring has been extremely muted. We had a slowdown with most of our top customers from the year before. None of our customers are small enterprises. We only work with very large organizations. Most of them are in the fortune ranges, and they have had a slowdown in their hiring piece. Also, there has been an increased focus from customers towards cost cutting and cutting down on discretionary spends, which has further impacted this piece. The other reason that our profitability has been impacted is that we are aggressive and bullish on the overall market. Some things are cyclical here. We had an increased employee cost owing to the 50 people that we added, which includes a good number of mid-senior level hires. We added a chief business officer as well. Overall, there was a high increase in the internal employee cost, and because of the fact that there is an overall slowdown in the business, they are taking a lot more time to become productive. Now, the reason for us being this aggressive is that the recruitment and the professional staffing or the IT staffing businesses are highly dependent on the internal manpower that we have. Most of these people are extremely stable owing to a large amount of incentives that they earn in their wherever they are working, and these incentives are paid over time, some over a quarter, some over 6 months, and owing to the slowdown, a lot of these people are available in the market, which we weren't able to hire in the past. The IPO helped us a lot with our branding to attract the right kind of talent, and we feel that to get into the right leagues in terms of growth, in terms of performance, we will have to add a great internal rung of people who are high performance people, and owing to which we have been extremely aggressive in our internal hiring. For the operating matrix, Siddharth will take over, please.
Good morning, everyone. So our off-roll headcount has increased from around the 22 odd thousand, which was the closing number for March 23, to 23 and a half thousand for September 23, which is overall an increase of 7.5% odd. Like Vidur also mentioned, our internal headcount has gone up from March 23 to which was 430 up to a 480 number for September 24. Also, if you'll see that we have added around 150, 160 odd numbers from FY22 to FY24, the first half of FY24, 312 to 480, which is in itself a large number of people that we have added overall as an organization. Uh, our top five customer contribution has decreased from 39%, which was in March 23, to 32 odd percent for September 23, which is a good sign for us as an organization. The next 20 customers contribute 43%, which is down from a 56 odd percent. So this has been so with the sales guys that we have been able to add within the organization, we have added a lot of logos which came into the organization from the from the second quarter of the year. So the uptick will now start showing in the next 6 months to come. The sector contribution is also mentioned in the screen. So we are working in the BFSI domain, engineering domain, IT, ITS, logistics, manufacturing, pharma, retail, FMCG, and FMCD sectors. The contribution is mentioned in the chart. So I'll highlight the financial performance for the organization. I'll be highlighting it on a year-on-year basis. So our revenue, which was 357 crores for the half year of 23, has gone up by around 18.2 odd percent to 423 odd crores for H1 FY24. The operating revenue for the same is 357 crores vis-a-vis 421 crores for for half year FY24. The EBITDA has fallen. The EBITDA for the last half year was 10.2 crores, which has come down to 5.12 crores. And the margins have also decreased in the same ratio from a 2.87 to 1.21%. The PBT again has fallen from 9.4 crores to a 3.5 crores, and the PAT has decreased from 9.4 crores to 3.75 crores. On a consolidated level, the revenues, which were 364 odd crores for last half year, has gone up by 18.38% to 431.24 crores, and the operating revenue for the similar period has increased from 363 crores to 430 crores. The EBITDA obviously has taken a hit. 11.3 crores has come down to 5.4 crores, which is on percentage basis a fall from 3.13 crores to 1.26 sorry 3.13% to 1.26%. The profit before tax has also fallen from 10.4 crores to 3.85 crores, and the profit after tax has come down from 10.46 uh, 10.46 crores to 4.3 4.03 crores. So on a segment wise bifurcation, the manpower services, recruitment and related HR services, we have increased on the our top line from 238.95 crores to 285.13 crores, which overall is a 19.32% increase year on year. The trading of electronic goods, from a 125 crores, we have done around 145 crores, which is a 16% increase. And overall, as an organization, it's 363.94 crores has risen to 430 crores. The EBITDA has fallen in the manpower space from 10.44 crores to 4.10 crores. Electronic goods, it has increased from 9.33 crore, 90 lakhs to 1.30 crores. The overall EBITDA has is 11 is 1 point, I'm sorry, total EBITDA is 11.3 crores, has come down to 5.44 crores. The EBITDA margins for the core services has decreased from 4.37 crores to 1.44 crores, and on the electronic goods side, it has increased from a 0.75% to a 0.90%.
Thank you, Siddharth. Uh, uh, for the way forward, as you can see, there is an overall headcount growth. There is an increase in business that we are generating. As an organization, we've only been hit by the cyclical nature of the recruitment and the staffing business, IT staffing business. And at the same time, we are extremely aggressive and are confident on the business. And our business model is sound. We are investing heavily, and we are looking to grow back and significantly improve in the H2 of this year, which will set the pace running for the next financial year. Uh, Vinay, we will open the floor for questions.
Sure, sure. I'll first call Mr. Chanish Thadani, who has put in a question on the chat. You can go ahead, please.
Yeah, dear sirs, good morning. My name is Chanish Thadani. I'm from Bangalore. Thank you for this opportunity. Overall, what I find is things have gone particularly wrong during the last half year. Although sales have gone up, the expenses have gone up a lot more proportionately. There's a 20% top line growth, but the expenses percentage wise are so much that the bottom line has dwindled a lot. Now I understand that this is due to the professional staff increase or the headcount growth. But the OPMs having come down from 3% to 1%, and the PAT dropping alarmingly from 17 crores to 4 crores in September 24, that is lower by about 75%. I think whatever the reasons you, Mr. Vidar Gupta, cited, I think a drop of 75% seems to be a lot on the higher side, don't you think?
Chanishji, I understand the concern. So I would like to give you a brief on a little more on the business model that we have, especially in the recruitment and the professional staffing business. The recruitment business is a complete service charge based business. So that means any and every revenue that we generate there contributes directly to the gross profit. Now, considering that we've added a lot of people in the staffing business, we've only added salespeople. In the recruitment business, we've added good delivery people and salespeople because both of those go hand in hand. And to pick up large projects, you need to have the right kind of delivery team in place and delivery capability. And owing to which, the in the recruitment business, earlier the selection would happen in probably 2 or 3 interviews. But because of the soft nature of the overall market, what is happening is that customers are now taking a lot more number of rounds of interviews and also are not offering the same kind of percentage hikes that were being offered last year to candidates. I'm sure you read everywhere that compensations are increasing at a very brisk pace. However, that has not been happening now, owing to which the backout ratios have gone up. And all of this accumulates into the reduction of margin. I can assure you that this is cyclical, it is temporary in nature, and it is also because of the fact that we are being extremely aggressive. Now, for an organization like ours, if we want to get the profitability up immediately, what we can stop hiring. Also, if we don't give appraisals internally, staff will leave. So all of those factors are there, which we have to take care of, and we have to look forward. So we've raised a certain amount of fund from the market, and this fund is aimed towards expansion of the business. So I can assure you that this is all the money that is going into investments, and at the same time, it's a slowdown in the recruitment business. Uh, if you look at any presentations anywhere, you will hear from the market that the recruitment business has been extremely slow. Our top three customers from last year have reduced their hiring by or hiring spend by over 80%. But this is only temporary. We are
So
seeing
would
that
it,
the market has started opening up again, sir.
yeah, thank you. So would you say that we can see a good revival during the second half of 24?
So you will see a significant improvement in terms of margins in the second half of 24. Obviously, we cannot cover what we've lost out in H1, but we will be able to cover significant ground, setting the pace for the year 25. But I can assure you that the recruitment business has been and the specialized IT staffing business has been affected for everyone. It's not just us.
Yeah, I understand that. So for FY24, the estimates were projected at about, the top line was estimated at about 950 crores. Is this realizable?
So the top line growth is intact, sir. If you see that
Yeah, yes.
we will be able to achieve our top line targets. It is the bottom line that we want to focus on,
Yeah.
which obviously, when you're growing at a certain pace at our size, takes a certain amount of hit, and we'll be able to normalize it. It's just a function of growth at the moment, with the fact that the market is slow. But sir, the fact also remains here that whenever there is a slowdown in the recruitment or the staffing space, there is a massive boom that follows it. Now, when that will happen, only time will tell. But we are seeing that green shoots have already started coming. Customers have started opening roles. We are getting a lot more number of roles that compared to what we were getting about 4 or 5 months ago.
So in the last con call, sir, you had projected a CAGR of 30 to 35% for the next 3 to 5 years. Are you still on course to achieve this?
Absolutely, sir. We are on course to achieve a CAGR growth of 30 to 35% on the top line. Bottom line will take some time to normalize because the market conditions have changed quite a bit. The moment they are back on track, we'll be able to get back on in terms of our bottom line percentages.
Sir, one last critical question. The IPO was at 173,
Yes, sir.
whereas the current market price is barely half.
I
Uh,
understand.
GMP prior to listing was 32 rupees. So things have gone horribly wrong post listing. What do you have to say to investors who are sitting at such humongous loss?
Uh, Chanishji, as an organization and as promoters, we both are working hard towards achieving size and scale for the organization. Now, I really don't know why the stock price has been like that, but I can assure you there's nothing wrong with the company. We are working hard and we are on track, and it's market forces are absolutely beyond our control.
The estimates I read somewhere for FY24 were of the order of uh, attaining a PAT of 36 crores plus. Obviously, you people will not be able to deliver even half, I am afraid. Uh, Something to say again, Mr.
Uh,
Vidargupta?
I have given the reasons, sir. So there are some things that are absolutely beyond our control, which is an extreme play in the market circumstances. The interest rate increase in the US and the geopolitical situation in Europe. We've seen a few banks going down, mergers happening, and takeovers happening. All of that just impacts spends in a very, very big manner.
Okay, so my
So
last question again. This is the last actually. Now, those investors who are sitting on such loss, would you say that they can still trust you to deliver ultimately, and they do not exit at such losses, please?
Chinishji, we are holding an earnings call, facing the music and giving you all the justifications. None of our customers is a small enterprise. All our customers are large enterprise. Beyond that, there is nothing that we can do as promoters, sir.
Okay, thanks a lot. I really appreciate your sincerity, and I wish you all the best. Hope
Thank you, sir.
you will be able to give us some good news during the next con call. Thank you
Hoping, sir.
again.
Hoping, sir.
Thank you.
Thank you
Yeah.
so much.
Thank you, Mr. Thadani. We'll take the next question from Jatin Chawla. Jatin, you can unmute, please.
Hi, can you hear me?
Yes, you'll have to speak up a bit louder.
Okay, sir. Uh, you mentioned two main reasons for the margin decline, right? One is that the recruitment business is down, and the second is your internal employee costs are higher. So if you could just quantify the two, internal employee costs, what were they in the first half of next year and last year, and what are they in the first half of this year?
Jatin, your voice
And
isn't very
the
clear. We're not able to hear you.
Jatinji, we can't hear you, sir.
Jatin, if you can
Okay,
send
now,
your, if you, yeah, slightly better.
so yeah, my question was that you gave two reasons for the decline in margins.
Mhm.
The first one was that your recruitment business is down, and the second that the internal employee costs are higher. So I was looking for some quantification of the same. Your internal employee costs, what were they in the first half of last year, and what are they now? And similarly, your recruitment business revenues in first half of last year, and what is it now in the first half of this year?
Uh, uh, Sir, in terms of a segregation of revenue, that is something that is uh, a, a business critical information where we have we have different manpower contributing to. So there are staffing customers where we have recruitment revenue as well. We have recruitment customers where we have staffing revenue as well. It's a figure that's going to be difficult for me to say out. However, on the employee cost, I think Siddharth can shed light.
So, Jatinji, our internal employee cost for the half year last year was around 9.8 odd crores, which has gone up to 13.2 odd crores for the corresponding half year, which is H1 of 24.
Okay, understood. When I look at your cash flows statement for the first half, I can see that a lot of investment has happened on the working capital side as well. So to me, it's looking at those numbers, it seems that there is some business mix shift from collect and pay to pay and collect. Is that right?
That's correct. That's correct, Jatinji. Hello.
Hello.
Yeah,
Yes, sir.
Jatinji, am I audible?
That's
That's correct. We have shifted. So we have gained some contracts on the industrial staffing front, which happen to be pay and collect as per the industry norms. And these
Now,
contracts came.
normally,
Yeah,
yeah, so normally when that shift happens, that is also correspondingly, it should boost your revenues because you will have higher, per associate per month kind of realization when you have moved from collect and pay to pay and collect.
that's
So why
correct.
is that something that is not visible in the numbers?
So, sir, the addition of these clients happened in the month of August and September. So we have only been able to do two payrolls for the first half of the year, which will be six payrolls in the coming half year. So numbers would start reflecting in the second half of the year, basically.
Understood. Understood. And this recruitment business investment that you are doing, when do you expect to see benefit of the same in the second half, or should we expect more like FY25?
Sir, we have already started seeing green shoots coming. We've landed a couple of good RPOs as well. And but typically any recruitment project that we get takes 3 to 6 months for the revenue realization to start happening. We receive mandates today from a customer, we start delivering. They select a person. India notice periods are between 1 month to 3 months. Candidate joins, then we raise an invoice. So it is at least a 3 month process or a 4 month process in most cases. So there will be an impact in the H2 as well, but significant impact will be coming next year. That's the nature of the business.
Yeah, get it, completely get it. Not the other question I had was in your financial statements, the line items pertaining to purchase of stock in trade and change in inventory, those are to the related to the trading business, right?
Yes, sir.
That's correct.
So when I look at that, cost as a percentage of the trading business revenue, it seems your gross margins on the mobile business has gone down significantly from like 3.5-4% to more like 2.2%. So is that understanding right? And if that is the case, then what is driving that?
So,
So
sir, yeah,
yeah, please take over, sir.
okay. So, sir, इसमें what has happened is that the margins in the first half of the year in the industry are usually lower, and when the festive season kicks in, is when the margins start improving because there are more schemes that are available on offer for us to be picking the stock up at. And also the second reason is that we aren't focusing a lot towards the trading business, as we have already informed that we'll be completely shutting down the mobile operations by March 24. So focus area is not towards investing a lot of time and effort towards improving the margins over there. We have also reduced our team size on the mobile front as well. So all these things correspond to the reduction in margin there. So if you see
Got
the
it.
how if you see the yearly margin, it'll be similar to what it was uh, in the last year.
Understood. Understood. And in the first half, the growth from FY23 in terms of the staffing business is slightly lower than what I would have thought. Is there some seasonality there as well that the second half is stronger and hence for the full year we will see better growth?
So slight seasonality, but in the first half of the year, there was some attrition also in the clients that we had, where the backfilling did not happen. So which has now happened owing to the festive season, and numbers are again back on track.
Okay. So, and this attrition was because of the slowdown, or what was driving this
So various
attrition?
clients have various things. There were some at in on the industrial side, there was hiring. On the retail side, there was slightly slowdown in terms of the backfilling that the clients did not do.
Got it. Got it. Got it. Understood. Thanks a lot for answering the questions and best of luck going forward.
Thank you.
We take the next question from Arun Malhotra. Arun, you can unmute, please.
Yeah, good morning. I saw that the performance has deteriorated across all parameters. There was a sharp stock fall few days back, 18% in one single day. Would the management like to comment on what the reason was?
It was probably a reaction. So that sharp drop was the day after we published our results. And but that's all that we are aware of.
Okay. So, and do you think next FY25 would be better than the current economic environment which you just mentioned?
Definitely, sir. So what is happening is that in economies like the US as well, people are starting to realize that interest rates are here to stay, and investments are opening up, and spends towards technology and other fields are increasing. At the same time, there is an expected increase in the offshoring work. that is going to be happening, creating a lot more employment in India. So all of those factors will obviously help. Regarding the stock price, the drop that you said, that sir, our significant wealth is in this organization only for the both of us, and we are collectively holding over 70%. So trust me, it bothers me a lot more compared to what it would bother you. But then we are confident on the business, and we are in it for the long run.
I understand. When did the results got published? What was the date?
Uh,
Just a second, I'll just tell you. It was the 9th of November, if I'm not wrong. 9th,
Okay,
yeah.
got it. Got it. Okay, thank you.
Thanks. We'll take the. There's a question on chat. Let me first take that. There's a question on from Sujata Raman. One of the objects of the IPO was new acquisition. Can you share details of new business acquired, if any?
We have not acquired any new business. So there was a company that we were in talks with for acquiring for their technology platform in terms of employee self-service and customer facing platform. However, those talks did not materialize, so we haven't yet acquired anything or spent any money towards that.
There is one more question in the chat from Amrish
Thank you.
Patel. Do you see IT recruitment problem to continue or to last due to AI, artificial intelligence?
Uh, so whenever there has been a change in technology or new technologies have come up, there have been usually a lot more creation of jobs. So we don't think that AI is the one that's going to be affecting. At the same time, there is no company today that can function without continuously improving their technologies. They may put a pause towards it, but they ultimately have to spend on technology to stay in the race or to stay relevant. uh, Anyone who stops spending on technology or stops spending on improvement uh, aided by technology will have a shorter future. So the spend is not going to stop. It's going to increase. It's going to come back in. It's just that the market circumstances and the overall macro scenario have changed at such a rapid pace that people are taking a little bit of time to adjust to it. Also, what has happened is that if you look at the post-COVID period, the post-COVID slowdown period when companies suddenly opened up hiring, uh, they were offering a lot of work from home to most of their resources, and the work from home enabled candidates sitting in a particular city to land a job in five different cities, and that resulted in a massive dropout ratio and an increase in compensation as well. So there was maybe a Bombay-based company or a Bangalore-based company which would offer very high compensation, and there was someone who was applying from a Noida or a Bangalore or any other or a Chennai or any other place, and that increased manpower costs drastically for everyone. So in over the last few months, what has happened is that customers are optimizing this cost. They are getting everything to the right levels, or wherever they can. They're looking at optimizing this. So it is the stopgap where companies, when they grow very quickly in terms of manpower size, they take a pause. They look at what's happening, they optimize it, and then they start hiring again. So that is also another function here.
Sure. We'll take the next question from Manish. Manish, you can go ahead, please.
Yeah. Is it that my voice is audible?
Absolutely.
Yeah, yeah. Mr. Vidur, do you reply regarding the drop in the profitability? It is because of the your aggressive approach and the market condition and geopolitical condition also. So my question is why you are still aggressive when the market is not in the better position presently, and we cannot predict the market long run also, because the thing is that your spending and revenue, maybe top line is there but bottom line is not coming up. So same thing can happen in HY2 also. That is my question.
I understand, Manish. Manish, our business or any recruitment and staffing business is a manpower driven business.
Yeah.
It's like in a manufacturing setup, आपके पास machine होता है
Right.
that you buy. In our case, it's the manpower. Those are our assets, and manpower at mid senior levels in this industry is extremely stable. All the attrition that most companies will have internally will be at junior levels. In the current scheme of things, because the overall market scenario is not good, a lot of people have not made the kind of variable compensations that they would make in the past. And a lot of great talent is available to hire, which we normally would not be able to hire. And it gives us an opportunity to hire these people. Second, whenever there has been a slowdown in the past, it may be 2008, that's when we started. It may be COVID, it may be other years. Uh, all of that contributes to a sudden increase in hiring after that. Now we are all of these people that we've hired. It's not that they're not generating any business. ये नहीं है कि वो अपना cost भी meet नहीं कर पाएंगे. They'll be able to generate revenue. They are obviously coming in. They are bringing in a couple of customers, and we have to be aggressive. When the market opens up and then we go out and start hiring people, we'll not get talent.
Yeah. My second question is, you are planning to close down the mobile business from the March 24. So full year of the 25 would be of the only your main core business would be there.
Yes, sir.
So then how would you beat? Because presently you have a revenue little bit, whatever is there, also coming from the mobile business. That will not come from the year forward. So how would you see the compensation from your main field towards the overall bottom line?
Sir, if you look at it, we are anyways publishing segment-wise results where we have the HR segment, our core business, and the electronics trading business. Electronics trading business is something that is scalable, but the feedback that we've got from investors is that it is better for us to be concentrating on our core, which we absolutely agree with. That's where we are extremely strong. So there will be a hit in top line, but that's okay. That's a part of the process, and it's a conscious decision that we are taking as an organization.
Okay. Thank you very much.
We'll take the next question from Jag Sinha. Jag, you can unmute, please.
Yeah, hi, Vidur and Siddharth. Can you hear me?
Absolutely.
So the question here is, see, if you could, you are externalizing this performance beyond management. That market is this, geopolitical is this. Looking at it strategically, I remember in the last phone call, you were quite gung-ho about two things. One, the market is huge, which means the market size is huge. And second, that there is a space for everyone. It means there is, yeah. So now, given this situation, and we are in an economy, despite whatever is happening globally, is still expanding at the highest rate globally. And within our economy, as your own pie chart shows, there are many sectors. So why was it no? I'm trying to say, I am driving towards, is there an internal management strategic issue here? That why was it not possible? Because given that you have 14 years of experience in this business, coming out of MBA schools, to identify those sectors of the economy which have the size and also offer opportunity to differentiate and offer profit margins, classic segmentation, targeting, positioning approach in a strategy. So why is the management being reactive and falling out of the sync of all these issues put together? I would give you some time to just reflect on it, because this is a strategy. What is happening inside is what my question to you. Second one is very quickly, just so that is you have offices, overseas offices, US and UK. Sir, we have been global. We have seen the world. US and the UK have high fixed costs. And sometimes I don't want to say there are people who are sitting there and they generate cost and I don't know revenue. So the second question to that is what is the cost and revenue happening from these offices? And I don't want to say more on that because sometimes in some not so great companies, the friends are moved, families are moved, and they do their thing, and then L1 visa, and then they become citizens over a period of time. We have seen all that. So that is where I'm coming from. Are they generating value and the profits? Third one, very related, is when do you plan to start sharing the quarterly results? That is the third one. And the fourth last one is that you still have about 50 odd crores unused from IPO. So I know that in the last call, you explained the business model where you talked about that this is funds the working capital. That's how this model works. But still the good part of the IPO is still with you. How do you intend to put this money in a strategic way whereby you can lift the performance strategically in the second half? I know there is a phase lag, but how do you plan to use it? And also you didn't answer. You did talk about that we will let go the mobile business, but mobile business is still contributing about 50% of the profitability, approximately rough numbers. So I could be a bit wrong, but it's about in that range. So not only you got to give the total growth number, but also need to compensate for this loss of margin. So I let you have this, and you could kindly respond. If I have any follow-up, I'll come. Otherwise, I will end. Thank you.
Absolutely. I've written down the four questions.
Thank you. Thank you.
The first question regarding the industry. So what happens is that why we focus a lot towards, say, the big four, management, consulting, IT. All of these fields have much higher compensation levels compared to a manufacturing setup. Now, another field that has high compensation levels is banking and financial services, which is an industry we've not been experts at for the recruitment business. We have limited exposure to the banking and financial services piece. In the manufacturing segment, what happens is that the number of people that are employed in the corporate office or at mid-senior levels or at compensations that are above 10 lakhs per annum is very, very few. So while there are manufacturing sectors that are doing well, we are only picking customers where we feel we can make enough money. Otherwise, if a company today has, say, a role of head quality, I'm putting in some context, and you'll understand why I'm saying this. Say a manufacturing company that manufactures automotives has a position for a manager quality, not even a head quality, and the compensation range is at, say, about 15 lakh rupees. They work with 3 or 4 agencies. We all send a few CVs to them. They select one person, but the rest of those CVs are of no use because they only have one role. But when we are working with a technology company and they come up and say that we have a position for a .NET developer or for a Java developer or for say a full stack developer, they have multiple roles in most cases. So any good profiles that we send end up being put to use. Second, the number of people in the corporate office. So manufacturing setups would usually have much more limited number of people in the corporate setup. Whereas technology or management consulting businesses like these have a lot more of professional staff, which are being paid a lot more. And we make money basis the amount of compensation that is being given to the candidates that we recruit. So consciously, we are fully aware about the industry, and we understand that there are a couple of fields that we could have entered, but it takes time to build up a field. Recruitment is not one of those businesses where we can just decide and run from the word go. It'll take some time. It takes time to build, for customers to build trust on us, to give us the right kind of mandates, because they all have an existing ecosystem as well. So to enter a customer, you need to get into the existing ecosystem, make space for yourself. So over there, when it comes to industry, we are absolutely clear, sir. There's not even an iota of doubt that we are not headed in the right direction, or our focus is not there. Focus is absolutely clear. Now coming to the US and UK. UK, as we said last time, we are in the process of wrapping up. There is no employee there, and there is a bare minimum expense that we've incurred. It was, I think, 6 or 7 lakhs for
Okay.
the year. So in the US, we have one employee right now who's doing sales there, and that cost we have to incur as an organization. We don't have an option. We have to have someone on the ground there. We did have another person, but we've let go of that person. He wasn't performing. We're hiring someone else there as well. But at the same time, we hire people on our payroll in IT and we deploy them. We don't have any of our family members in the business, not even a distant relative or no friends in the business. It's all professionally driven, and we are absolutely clear with our thought process there. We never mix the two, so you needn't worry. Uh, Regarding quarterly results, sir, at the moment we don't have a plan to get to a quarterly result. However, we will deliberate more on this, and we'll tell you. Uh, Regarding the 50 crores unused from the IPO, so the fund that we've raised is for the right kind of contracts. It takes time to get these contracts. As we keep getting these contracts, it'll be deployed. But we are extremely prudent when it comes to deployment of this capital. We don't want to put it in the wrong place. So we, as and when the business comes, wherever we are getting, we'll be deploying the capital.
Okay. Vidur. Yeah. Thanks.
Thanks, Jeff. We'll take the next question from Kishan Pujara. Kishan, you can go ahead, please.
Sure. Thank you for giving me this opportunity. I hope I'm audible.
Absolutely, Kishanji.
Yeah, okay. We have recently got a one notification from that CB documentation where there was change in the IPO issue price, issue expenses. So just wanted to know some if there is any highlight on why there is a change in the IPO expense, and
So
they was
the
almost approx 15%.
okay, I'm not aware. Siddharth, would you want to answer that?
So Kishanji, what had happened was the issue expenses that were taken by at the time of filing of the RHP and the actual expense that was incurred, there was a gap. So we had to intimate the exchange that there has been an increase in those expenses, which has which we had notified in September also. And this is a follow-up of the same, where we have ICRA as a agency, which is monitoring the usage of the IPO funds. So it's a report that was published by them as well in the month of September, and now a follow-up report has also come on the 15th of November.
Kishanji, we were very clear that we don't want to, instead of reporting, we voluntarily chose a monitoring agency so
Mm-hmm.
that we can put in better corporate governance and build the right amount of trust.
Okay,
It
okay,
wasn't required. We were not mandated by the law
okay.
or
Thank
by
you.
the ICDR guidelines. We were not supposed to be having a monitoring agency.
Okay. And one more thing I wanted to understand is like I understand I am also from IT background, and we see that there is a quite slowdown in the IT business. Like very rare opportunities are coming up in the market, and I see that you have pointed out that due to IT slowdown and probably in the next half of the year, once the opportunity will revive, will be a growth in the IT business and subsequent to our recruitment and staffing business. So I understand that you have entered into IT business in last 1 or 2 year, or if you can
The,
share your expertise in this IT recruitment.
we entered IT recruitment just in the mid or end of COVID, uh, because IT was offering jobs that are work from home.
Yes.
Before that, we were not focused towards the technology piece. But nonetheless, we were always working with management consulting organizations. We were working with with global offshore centers, which have a lot of non-tech roles as well. We were also working with automotive technology centers, which are not always technology roles. If you really look at it, it's not pure play IT roles.
Okay.
So all of these fields have taken a hit.
Okay. So
And
you must have received good number of growth after COVID in that initial journey.
absolutely. So post COVID, so like I said, whenever there is a slowdown, there's a massive growth. So post COVID, it was a time where we could enter the right kind of customers, build a certain amount of growth there and traction there. But
Mhm.
then the way compensation increased, Kishanji, you're from the IT field, so you would know that a 10 lakh resource was being offered 20 lakhs or
Yeah,
25 lakhs. And that kind of an increase in compensation is not sustainable. That
agreed.
increase was being offered so that the IT companies don't lose their customers because of non-delivery. It
Okay.
had reached that sort of a stage. So it had to normalize, which is happening. And but then unfortunately, interest rates went up significantly in the US, and with the war and the geopolitical situation in Europe, uh, everything has been impacted. The banking and financial services industry globally has been impacted in a very, very big manner. You've seen a few takeovers happening. So it's all temporary. It's happened in the past as well. It's nothing that's not happened in the past.
Okay. In that case, could we say that looking over the current challenges, it will at least take next 1 year to, come up with the original predictions of the CAGR growth on the top line and the bottom line?
So the top line CAGR growth was primarily or is primarily going to be aided by the staffing, the general staffing business, which is intact. So the top line is not an issue. When it comes to the bottom line, that gets impacted by high margin businesses not being able to grow that quickly. But at the same time, like I mentioned, we've seen that work has started opening up, and we are getting projects from customers where they're looking to hire in the right numbers again. And there has been an overall stir in the ecosystem where existing agencies and new agencies are now being added on, and which is why we are seeing a revival happening as we speak as well.
So it will take 6 to 8 months of cycle, right, to encash the profit in the balance sheet.
Yes, it sir, कुछ आ भी रहा है, कुछ आएगा. So I
Yeah.
mean, I can't quantify exactly when or what we'll be able to materialize, but all I can say is that we've started getting work there.
Okay. But at least from the increasing the headcount of employee, like that effect will get
That
subsidized in the second half of the year, right?
it will start to show with the new
Okay.
headcount. They are starting to bring in customers. They are starting to deliver better.
Okay. Okay. Thank you, Vidurji.
Vinay, I can't hear you, Vinay.
Am I audible now?
Yes, you are.
Yeah. We'll take the next question from Darshit Vora. Darshit, you can go ahead, please.
Yeah, hi, am I audible?
Absolutely, Darshanji.
Okay. Yeah, so thanks for taking my question. I've already posted in the chat box, but I'll just repeat it. Uh, like, what do you think the revenue growth is going to be going forward in the next 2 to 3 years? And at what levels do you think the margin will sustain for the same period? Like, this time we've done some OPMs of 1%. So, do we see them going back to 3% sustainably?
Sir, absolutely. The margins can go back to a 3% sustainably, provided the market opens up in the right manner. Our recruitment and the high margin staffing businesses are currently affected, and they'll open up. It is cyclical in nature to an extent. This happens, and whenever this happens, after that it is always a slightly large boom.
Okay, okay. And revenue growth, you're saying that the 30-35% CAGR from FY25 onwards. All right.
We can maintain the revenue growth.
Okay,
Revenue growth,
okay.
we don't
And do
see
you
a
think
challenge.
the margins can go beyond 3%? Is it possible?
It's absolutely possible.
Okay, great, great. Okay, all the best. Thank you.
Thank you.
Thank you, Darshit. We'll take the last question since we are running out of time. We'll take the last question from Vinod Chandra Agarwal. Vinod Chandra, you can unmute, please.
Thank you for the opportunity, sir. I have a few questions. I'm an individual investor, so just allow me a few more minutes. The first question I would like to know about the opportunity size in this business, in the staffing business. Okay. And second question is about if you can explain me like what is this NAPS and NATS means in our deployment headcounts. And the third question I have is that when we say that during the downtime, we hire the people so that whenever the recruitment comes, we are ready for the staff, right? But during that staff, do we pay to the people? I mean, and what is the quantum of that staff that we pre-hire that one? So if you can help me to understand this, that will be good. Thank you.
All right. So I will leave the staffing business size and naps and nats to Siddharth. However, Vinodji, the staff that we are hiring, this is not bench staff that we will deploy to customers. The staff that we've hired is primarily for the recruitment and the staff, IT staffing business, where we have salespeople and we have recruiters and delivery people who can manage customers in the right manner, understand requirements from the customers, and find the standard. So it's not that we don't have work. We have work. And the new people that are coming in are also generating some new business, but it is taking time. So all of this result will start to show in the H2. And naps and nats, Siddharth, please take over. Naps, nats, and the
Yeah.
staffing business and staffing business size.
Yeah. So Vinodji, for naps and nats are schemes by the government, which any organization has to have some apprenticeship employees or trainees on their payrolls. So NAPS is a program which is for graduates and below, and NATS is a program which is for graduates and above. So any organization can have 15% of their total manpower as trainees. So we are TPAs to the government here, and we are authorized partners where we can deploy manpower for the organizations on NAPS and NATS depending on their requirement. With respect to the size of the staffing industry, I'm sure you'll be aware that Quest and team leads are at least they have manpower to the tune of 4 lakh people on their payrolls. We are currently at 22,500 odd. The size of the market is huge, and there are only, I believe, currently four listed organizations in this space. So there is scope for everyone within the space.
Okay, and one more just question is that about our recurring revenue. So what is the quantum of our recurring revenue? Because on a staffing business, if we earn a one-time revenue, like after a boom period or a economic cycle gets upside, the staffing will get stop hiring or will get very slow. But what is the recurring revenue which will continue to run our business? I mean, that is what I would like to understand. Or the quantum of the recurring revenue.
So staffing is a recurring business. Recruitment is a one-time selection fee that we get from our clients. So which of the two are you referring to here?
I mean, recurring revenue. My previous question was about the hiring, and that is a one-time fee which we received.
That's correct.
And then, okay, and the second was about the recurring, because recurring revenue is something which gives us a longevity of the business, right? So that I would like to understand that what is the quantum of that, what is the growth there in the recurring revenue, and what could be the size of the business.
So the manpower that we have deployed, these 23,000 plus people, this is all recurring revenue. And we are where we are saying that we'll be able to meet our growth targets is all the recurring revenue, which is a lot more predictable.
Okay.
So a significant portion of our revenue is the recurring revenue.
Okay, understood. Okay, thank you. Thanks for clarifying. That's all from my side.
Thank
Good
you,
luck
Chief.
for the future.
We'll
Thank
take
you,
one
Vinod.
more last question from Jug Sinha. Jug, you can go ahead, please.
Yeah. Hi, Vidur.
Hi. Hi again.
Yeah. Um, three sub questions, and if you could kindly again reply. One is, would you keep hiring or now put internal hiring on freeze, given and hold on to the employee benefit expense line item? That's one. Second is, are you not facing competitive pressure, where competitive quotes are going with where you have to reduce margin? I know you have used the word being aggressive. Is that word aggressive a reflection of you facing competitive pressure? The last one is, if you have to go out on a limb and all safe harbor disclaimers applying, what margin would you project for second half of this year?
The first two questions I can answer. The third question I would again refrain from answering in terms of absolute numbers. But for the first
range.
question,
please.
Would we keep hiring? Yes, if we get the right talent, we would keep hiring, provided they are able to bring something on board that adds value to us immediately as well. So the hiring that we are doing, we are not doing blind hiring. We are hiring people who truly will add value to the organization. They have to have a clear value add, where they may have a few strong relationships from the past. They may have delivery capabilities on a particular field that are very, very strong, and they actually add to our existing people. They may have managed large team sizes, which in which way they will help us to optimize our teams in terms of performance. It may be an increase in performance. So for the right people, doors are always open. We are looking to hire. Competitive pressure. So competitive pressure has always been there in this field. It's nothing new. When you look at the staffing business, I think the pricing has already hit its bottom. It's not going anywhere lower. So we are in line with what the market offers. In the recruitment business, there are contracts that have been available to us in which we'll not make money. If we don't think we'll make money, we'll not pick up those contracts. We are clear in our operating matrix as to how much of an expense we'll have to spend towards a particular customer whenever we are picking up the contract. If we don't think we can make that kind of money, we'll not pick up the contract. Thought process is very, very clear.
So if I can just follow up on this one, see, ability to make money also depends on what kind of offering you are bringing to the customer, which is in sync with the strategic or tactical needs of that customer in a particular segment. So there are other competitors which are, I think, I do not know too much in depth, but they are bringing to the table broader set of offerings. I don't know the one company called Updater Services or some others. They are offering a lot more. So my question is, how are you intending to differentiate yourselves where you have possibly competitors who are bringing a lot more into their portfolio of offerings? Are you thinking about this? My question's a lot more about the strategy. Operational, of course, there was one question is very relevant. I asked what is going to be your projected S2 number. If you can share a ballpark range is also okay, because long term is as important as perhaps given the sharp drop in profit, short term is as important. And you can see the shared concern on that account. So yeah, go ahead, please.
So, sir, when you look at the offerings, to give you an example, we offer recruitment services and we offer staffing services as well.
Right.
These are two separate offerings. Now, when it comes to recruitment, within the recruitment space, there can be a few offerings. So there can be a solution around campus hiring. There can be a solution around qualifying profiles, which means that you are taking a first level of screening or interview. There can be a solution around background verification. There can be a solution around candidate joining.
Yeah.
So we don't offer background verification, but we do have solutions around qualifying people. We do have solutions around follow up from people towards their joining. So we are in line, but a lot of times our customers would be looking for one particular solution. To give you an example, if you have someone who does assessments, now a customer will not take assessments from one agency and then take assessments from another agency because they need to rate people at the same ground. So if they're recruiting 10 Java developers, they need to have the same test for the 10. No?
Right.
So they'll only take it from one person. So there'll be someone who's an expert with assessment. That will not be combined with a recruitment solution.
Right.
A customer may have taken a recruitment solution and a selection solution from someone, but that selection solution is a whole different solution. And the recruitment solution is a different project or a package. So under the recruitment process outsourcing, we do have different solutions that we offer. We offer interview coordination, we offer reimbursement management, candidate management. So all of that we have, but a customer may choose to take one of those solutions or all or none.
Okay. Okay. All right. All right.
Right.
And yeah.
Siddharth, you want to take the second question?
The margin one, are we
Yes.
supposed to be?
So we don't want to give a forward-looking statement, sir, but one thing we can assure you is that it will be significantly better than the H1.
All right. All right. Thanks very much. There is a lot of trust and confidence on two young people who have been in this business for 14 odd years. And I think a lot of people are betting on you to lead the company. Thanks very much for your time.
Appreciate, sir. Appreciate.
Mr. Sinha, since that was the last question for the day, Vidur, would you like to give some closing comments before we end this call?
Yes, yes. So all our investors, we thank you for putting trust in us. We can assure you that the business is sound. The business model is sound. There are some things that are cyclical in nature, which are beyond our control. But please be assured, we are doing our best, and our team is doing their best to come up and to be amongst the top names in the market over the years. Thank you.
Thank you, sir. And thanks to all the participants for joining on this call. And thank you to the management for giving us their valuable time. We end the call now and you may all log off now. Thank you so much.
Thank you. Thank you.